You are such an amazing person that have gone through so much stages of life, met so much people, and now you are a VC at Accion Ventures. Matt, welcome to the podcast, man.
Thanks, Joe. Appreciate it.
Could you talk about your journey from really the beginning of being interested in VC to right now as a VC?
Yeah, certainly. I first uncovered venture capital. I actually had a roommate in grad school back in Michigan who was applying he basically wanted to get into venture capital and was traveling essentially across the country from Michigan to California every week just to talk with investors and meet with them out there. At the time, honestly, I had zero interest in it or desire to be in finance. Like, it was not my plan when I was in grad school. I was going to do consulting. I wanted to stay in industry, not at all on my radar. But I think where it started to shift is when I started working with tech companies, in particular working with a couple of venture-backed startups in Detroit after my time as a consultant at a bigger firm, and then moving out to the Bay Area, being an operator in several earlier stage companies, where I really started to see how VCs could deliver on not just, I think, providing capital to these companies, but really, I think, leveraging their expertise, their networks, and their connections. And thing I always wondered, what would it be like to see the world from that lens? And after moving to DC, joining another startup, and that being another experience for me, I was just realizing I think maybe now is the time for me to try this out. I think and as you know, I think your podcast is entirely centered around this idea of how you break into it. And it was one of those things where it was entirely serendipitous at the time, where I was looking for my next role. There was an opportunity to go back to Salesforce where I had been previously, before this other startup, or I did get connected to the folks at Accion, and it was through a friend of a friend, and they essentially were looking for someone who didn't have the deep investment experience, but was looking more for operating backgrounds, so really understanding the daily challenges that an early stage founder is going through. And I knew that world. It was basically what I had been living in for a good chunk of my career up to that point, for at least the past 5 or 6 years. And that's ultimately how that all came to be. Fast forward, was it 6 years now? I've been at Accion Ventures, and certainly I think it's always on a daily basis a new fun experience. And but I would say that the journey there was not, number one, not what I expected in my 20s for sure, and I would say even into a good chunk of my 30s. And it also wasn't really when I was making large career pivots, wasn't what I expected. But when the time was right and the opportunity landed in my lap, in many ways, it was something I couldn't pass up. So here I am.
And it really just found you, like you said, you've been in the startup space as an operator for a good chunk of your life. And then somehow, you're like, hey, what does it feel like? And what does it look like from the other side? And that pivot just came so natural and so serendipitous that now you're a VC. So who is VC not for? VC could be really tough with long hours, and it's not for everyone.
Yeah, it's interesting. I think now, having been in in the VC space for a decent amount of time, and I always reflect on that. This is the longest I've had one, like I've worked with one organization. Up to this point, I worked for 4 years in aerospace before I went back to grad school, and kind of had 2 to 3 year stints at all my other jobs. So in many ways, I've gotten more immersed in this than I think any other job I've had so far. Yes, I think there are certainly some aspects about venture that come across as very shiny, that sometimes does not reveal the full reality, I think, of what venture is. So number one is, at the end of the day, it really is, you're investing other people's money to make them money. And in a lot of ways, I at one point, I think, said it's a lot like being a mutual fund manager in some ways. So, and not nearly as many people get excited or like jazzed about being a mutual fund manager at Vanguard. But kind of like in principle, like the things you think about on a daily basis around portfolio construction, market returns, engaging with your investors, that there's a lot of similarities to that. And so I think it's, if someone does not have a particular desire to be in the finance industry for whatever reason, it could be ideological, it could be structural, then I think it's a hard it could be difficult because no matter all the things the opportunities you get the upside to VC of meeting with founders, learning about new innovations, getting a chance to form a thesis around those things and compelling investors to entrust you with their capital to find these new and bright ideas. At the end of the day, you have to go into the sometimes monotonous process of running diligence on these things. And it isn't always, it's not always rosy. And like the long hours are not oftentimes like where you're sitting there negotiating back and forth at a table. You actually are like doing like micro iterations on an Excel model. I think if that's the nature of things, that does not sound exciting to you, then I think it's a hard job. I think that's also probably why I think a lot of consultants find themselves intrigued by venture capital because I think there's also a lot of parallels in what you do as a junior consultant that also line up with the basic building blocks of how to be a good venture capitalist. So I think I feel like that's the top line, right? I think that the other part too is, I think if you are in a position where you feel comfortable with the status quo, that there's the idea of and also again that for certain people at that whatever stage of life in and say like they want to devote more attention and energy and time and brain space to things outside of their job. There are plenty of really great, well-paying jobs that can enable you to do that. Venture capital is neither the most cushy nor in many cases not the best paying job that is out there, and there are plenty of other options. But if you get up every morning and say, I want to really begin to explore how it is the world can hopefully be made better through capital and not just be made more detrimental. Then I think that certainly there are so many things I think within the day-to-day basis that a VC focuses on that is right for you. So it comes down just to where someone is in life, the fundamental things that really get them wired, and whether or not they're willing to put the extra energy in their mind and I think in their and really their career to make that happen. I would say for me, as mentioned, I'm a dad. I have a very young kid who's 3 years old, and it does mean that at certain times that I also have to make trade-offs around how much energy I devote to my work versus to my family. Family always comes first, and that doesn't always translate over into the things that venture capital expects of somebody. But I'm also okay with setting those boundaries, and I think that's the other aspect of it too, is that if you want to maintain a long-term career, I think in venture and see this very similar parallels to consulting is you kind of need to know where your boundaries are to make sure that your life and the things that are most important to you, if it's not your job, come first. Because otherwise this job will take those things and disrupt them if you allow them to. So I know it's a long-winded answer, but I hope that like gave some like context into maybe the decision making on my side.
And that's what people think, right? Like you said, it's flashy. They think that it pays like so much. But if they want to be either on that spectrum of like, hey, I want to get paid so much, or I want to be like famous, whatever, venture capital is not really for that. Like you can get way better paying jobs than venture capital. And to the core of it, you choose venture capital because it is your mission, because of where you are at life and which priorities align with you. And obviously, you need to make your boundaries as well. So I'm pretty sure a lot of people is curious because you do a lot of stuff every single day, but there's different roles in venture capital. There's the investment people, there's operating people. You are an operating partner. What does that actually mean in a venture capital fund versus the other VC roles?
Yeah. I would say there are multiple different iterations of this. So operating partner is at least my understanding is it originated in the private equity world. So a lot of times an operating partner would essentially, as part of some form of strategic acquisition or buyout by a private equity firm, would oftentimes introduce an operating partner to essentially help shake things up within the organization. So someone who with deep operating experience who could then come in and help I think carve out or define the execution plan for what it is that the firm intends to do with the company. So I note that because I think sometimes the connotations around what an operating partner in venture capital does can be based off of that. But I would say that the role itself within VC has evolved quite a bit. And now when you talk about what that role is, usually I think it falls into a couple different areas. So one is there still is this component of has an operating background and understands how to really, I think, adapt, meet the needs of the fund's portfolio. So has good founder presence and is able to really understand how to identify some of the strategic and operational challenges that a company is going through and really help them navigate that. But in other instances too, there could be other aspects of what's really started to be connotated as what I call platform within venture capital, where there's a lot of other things when it comes to comms, marketing, more digital or democratized support services for portfolio companies, leading the content strategy, hosting events, these sorts of things. And so the reason why I think there's a lot of different answers to what exactly an operating partner does is every fund or firm that has some sort of platform strategy is likely picking or choosing from a handful of those things. And in most cases, the operating partner is the one that sets the strategy for the fund. In some other instances too, the operating partner might be more responsible for some of the internal fund management tools, reporting, LP communications, investor relations. So it really varies depending on who you talk to. So for within my role though, where I focus on is much of what I was saying around the founder centric components of the work that we do as a fund. So if you think about everything outside of governance, that then many of those things when it comes to strategic and operational support, building out content, thinking about the thought leadership we want to push out into the world and share with our co-investors and with the broader fintech community. That's all stuff that I lead the strategy on. At the same time, very much involved as well in the diligence deal flow, having conversations with our investment leads who are stationed geographically, and really making sure that we're also thinking of how do we take some of our operating knowledge that we've learned in working with our portfolio companies and bring it into our diligence process. So to make sure that we are always becoming smarter investors and really evaluating our companies based on really what we've learned over at this point, investing in over 70 companies so far across Accion Ventures three funds. So that I'd say the operating partner role. And then we can talk a bit more if we'd like around the different roles that exist within venture. So in many cases, there's not a lot of different striations, I think, within venture. You have I'd say the different levels around an analyst, associate, principal / director, and then VP sometimes is also in that principal role and then a partner. And I like to think about sort of there's these different pathways. It depends on whether it's much more investment focused or it's more operational focused. I would say let's say you're a bigger fund. You've got roughly 500 million AUM across multiple funds. So let's kind of use that as an archetype because I think that maybe is like representing a median type of fund. So within that, you're probably going to have the managing partners who ultimately are responsible for the day-to-day management of the funds. They oftentimes are going to be, in many cases, having conversations with limited partners, current or future. So like they're really involved with fundraising. There's also going to be an aspect there where they likely are also going to be on what's called the investment committee, which will be the decision maker, the final decision maker on whether or not we choose to invest in a company. So it's kind of there's a smaller committee of folks, several of whom are external to the operating company that runs the fund, but the managing partner is oftentimes engaging with them on that level. And then the principal level, this is where it's a bit more strategic in nature. It's still like a pre-partner level, but usually the principal and associate levels are the ones where they're in many cases bringing the deals forward to make a case for investment. So a lot of times their role is a combination of deal flow, diligence, finalization of deal documentation, but then also they're going to be involved, say, more in a governance role. In many cases, the principal level and the associate level, that's where also they're helping maybe define some of the investment theses that the fund is going to be focused on. This is where, and in many cases, in our case, particularly at Ventures, because we're a very geographically broad investment strategy, it means we have investment officers that are at the associate and or principal level who are all thinking about what their investment strategy or thesis is going to be on a geographic basis. So they're really thinking about from two lenses. One is going to be what we want to do in this particular geography, and then what types of models we want to focus in on within those geographies, and what are some of the nuances that come along with that. Then what we also have and kind of on the kind of more the junior entry level role is what we call the analyst, and this is where in many cases the analyst is going to be maybe not as heavily involved in actual sourcing of deals, but could be more responsible for supporting our associates or principals on running diligence. So a lot of the a lot of like the back end calculations when it comes to assessing a deal, associate or analysts are going to be more heavily involved in that process. So that's all investment stuff. And then for again using this archetype $500 million fund, you also have some folks on the operating side, and that can vary. There can be varying levels of, and as mentioned, you have someone like me as an operating partner who kind of is involved in much in the strategic support for portfolio companies, but also in many cases have much more of an investment focused lens because I'm working very directly with founders. So maybe I'll kind of keep that as like a category that stays in that investment component. But then there's also, I think, everything related to internal operations of the fund. So it could be, as mentioned, investor relations. It could be an analyst that's focused more on some of the broader macro observations they're seeing within the fund. So it could be the point person for like the fund management tool or the overall reporting they need to do to limited partners. So there's kind of these different categories that kind of is a bit of a catch-all, and just depending on what levels of involvement that fund requires, and they could have one person, they could have multiple people. So that's like there's sort of these 2/2.5 categories of different roles I'd say fit into those buckets that I mentioned.
Yeah, that sums it up really, really well. So talk a little like 9 a.m. I do this. Give me a day in your life.
There's no there's no specific I'd say category to things, but I would say my let's maybe talk about it from a week perspective. My week, I try to set it up in a way where I leave enough space for some core things. One is internal meetings, collaboration. Overall, my responsibility is to, alongside our managing partners, is to ensure the success of our team and all the different things we're focused on. So at Ventures, we have a team of 14 people, and they're all doing various things, and all three of us are thinking of like our responsibility to ensure that what they're focused on individual levels translates to the broader success of Ventures and our strategy. So that's kind of like the overall mission when I think about my week. So that involves a few things. One is going to be having focused conversations with every one of my team members. So usually my Tuesdays, I'm accounting for 6 or 7 internal meetings, just 30-minute check-ins with each one of my staff, and just touching base on what are some things that they're focused on, what are some layers to unblock, anything I can help with. Then there's also going to be more strategic things. So there could be some initiatives or strategic work that we're doing with particular partners. We have an interesting model in that we actually work with several grant providers, such as the MasterCard Center for Inclusive Growth. We've worked with the City Foundation and a few others. So there might be some conversations we need to have there around how we're moving programmatically on those topics. And that could be myself, a couple other people on my team, and then also with an external stakeholder. That's another dimension. There's also going to be a part of my week that is involved in monitoring some aspects of diligence we're currently doing with companies. So case in point, we have 2 deals we're looking at right now. We're going to bring in front of the entire team at Ventures, and I'm doing some quick checks on the financial model and also on the pre-investment memo that we're writing up. So the investment lead is responsible for that, but there's some things from an operational perspective that I get involved with on the diligence phase. In particular, 2 things. One is how their tech stack is matching up with what we commonly see within this time frame. But then also, what are some of the things we want to work with them on strategically after we make hypothetically after we make an investment. So I'm bringing my feedback into the document that we are ultimately preparing for our team, and then ostensibly the investment committee if we decided to bring that deal forward. So that's another dimension. There's also another component of this too, as mentioned, is like in many cases, there's probably 4 or 5 different companies I'm working with in a given time on a wide variety of strategic topics. So it could be that one of our associates maybe is leading that strategic work, but I'm really a responsible advisor to them to make sure that the types of things that they're speaking with the companies about does match up, I think, with the things that we've learned and the ways we can effectively support them. I will dip my toe in even more substantially, especially if we're leading up to a more substantial project with a portfolio company. So the reason why I laughed a little bit is because all those different buckets I mentioned, some days there's a whole bunch more of it. Other days there's none of it. It can just really widely vary across a lot of different things. And I didn't even mention, if we are in a position of like fundraising, it could be I'm having conversations with prospective limited partners. It could be that I'm actually on a call to help provide perspectives to a current limited partner. We had a call yesterday with an LP on a particular topic related to generative AI and financial inclusion. So as you can see, my days are wildly variant depending on the condition and whatever the fund needs me to be at any given time.
Yeah, and people can really just think of it as like a seasonal cycle type of thing, where if deal is at a certain stage, then that is the stuff that you mainly focus on. And then if you guys are fundraising, and that is what you're supposedly focused on, but it could be combined as well. And what that means is you could be working on a deal and you could be fundraising at the same time. So it could be like a combination of really, really random, but truly important things. You mentioned that you also help with the due diligence and deal flow, and you've created some tools for that. Could you talk a little about like maybe AI tools used in like a VC fund?
Yeah, it's the really interesting thing about, and I was actually having a conversation with one of our tool providers today. And we're just laughing about the fact that the tools and systems that are made available to venture capital and in some ways I would even argue the financial services industry writ large are so fragmented and so disjointed in many cases. Just that there's not. I almost feel like you could talk to 100 different venture VCs and you probably get about 100 different, if not 1,000 different combinations of the tools that they actually use to run on their funds, which makes it incredibly challenging because you don't have any particular industry leaders. So as you can imagine, that also translates over into how funds are using AI. And I think what I would say is in the past year or so, the conversations that I've been having with other funds and other partners of other funds is that there's certainly one, I think there is really an insatiable appetite to figure out what are the right ways to utilize AI in day-to-day operations at a venture fund. And as you can imagine, I think the places by which that can be most effective can vary. But of course, it comes down to how we can get smarter around deal flow, how we get smarter around assessing companies, diligencing them, governance and support. So it's almost like these components of find, decide, win, support, and exit. Like these are kind of five principles of what every fund needs to do. And what I think I have like a particular opinion on this, but I think probably where most of the opportunities like lie at the moment, and this comes down just I think to by nature, I think what people are starting to use AI for, and that's I think becoming more efficient at tasks that take a considerable period of time. And a lot of the thing is I think more front loaded, I think in what VCs do. So it is you have this funnel of potential investment, of potential portfolio companies or potential investments to make. You want to figure out how to make that more efficient, maybe baseline it against your existing investment thesis. And then you want to figure out a way to make the memo writing process more effective. So like you're building out like an initial dossier in the company. So I think a lot of what we're starting to see right now is more of like that front end stuff. But I think where the really interesting things are going to be as well is how this is being used for portfolio construction and management. So one of the things that a lot of venture funds don't talk about, but I think part of the strategy is if you think about the returns you want to generate on on a fund back to LPs, you want to make sure not only are you investing in the right things, but also that you're investing in the right mixture of companies. And it's a little bit difficult to say, at the time of investment, we think this is going to be, a 10x company or a 5x company. You can make those projections, but once you invest, all that assessment it somewhat goes out the window. It's tribal knowledge and it's captured in with people that are reminded of it, but there's not really a good way of going back to say predictively, did we look at this the right way? So I think more of that like predictive stuff and how that might translate into a portfolio structure will be a really interesting way I think AI is going to be leveraged in the future. I think another thing that probably is going to be interesting too is how my optimism around this is that more available knowledge around particularly emerging markets will actually make it a more exciting place for many venture funds to go where they haven't before. We always like to comment that, at Ventures, we have started out investing in emerging markets since day one. Since 2012, 90% of our investments have been outside the US, which is pretty rare for a US based fund. What I would love to see is more of the if AI and information that's readily accessible can be made to de-risk these markets for more investors that historically haven't gone in, I think that's exciting. It just means that there's like better startup ecosystems, there's more available capital. I don't think we're there yet, but I could see that as being a really, really great boon for these non-traditional markets to receive more outside capital because generative AI has enabled them to intelligently see these markets in ways they didn't necessarily see before. But we'll see. We'll see if my prediction comes true. If not, then you can chalk me up as being just a terrible AI investor.
Yeah. And the thing that you said, a mixture of companies, is that truly the right mixture? And are those projections correct? That is a really, really interesting thing that could be actually developed. And on the second one that you mentioned, could you go a little more specific on that? Like, what do you actually mean?
Yeah, well, I think we face this challenge all the time is that ultimately we have when the number of markets you can invest in goes from 1 to 20, what you're finding yourself facing is you ultimately have to keep track of 20 different lines of regulatory policy trends, like macro trends. And, there's a certain extent that and I think we can do that because we've been doing that for so long. But it's not for someone who is never, um, to use a pun, ventured outside of, a target market. Like if you're a UK investor that only invests in the UK and maybe a couple other countries on the European continent. If you're a Singapore-based investor only to Southeast Asia, if you're an India investor, but you're saying we want to diversify beyond these markets, but I don't have the requisite knowledge to feel confident in making an investment. My LPs don't have a degree of confidence in me making investments outside of this market, then they just aren't going to do it. Like it's a very healthy risk aversion to do that. So now if we talk about, well, what are the things that could really equip a venture funds to know more about these markets and to make good calculated decisions based on the risk profile? That's really exciting because then it just means a lot of that upfront work can be done utilizing the available information that frankly our investment officer in Africa knows these things because they are much more clued into these markets. It's just easier to be made accessible to an investor who isn't necessarily in the know. That's kind of what I mean by that. It's like we're helping de-risk for these looking at these markets in ways they necessarily haven't done before.
From your experience in terms of this, would you say it's because investors don't have access to that knowledge, or is it because they don't know which questions are the right questions to actually ask?
It's probably a little bit of both. I mean, I think the questions are probably quite similar, I'd say, across markets. What's the macro environment? What's been happening with local currency, foreign direct investments? There are things you can read like World Bank reports, and they'll tell you like the economic outlook for certain markets. But then when you start getting to things like regulatory policy, and we've seen this in particular when you think about cryptocurrencies and stable coins. I couldn't tell you on a given day which markets are or are not moving in a favorable trend toward adoption of stable coins and blockchain-based currencies. I can give you like some general like sentiments, but these things can change so quickly. I mean, especially you look at things like the regulatory bodies in Kenya, Nigeria, and India. Sometimes they may have a fairly consequential policy shift that would change the approach to fiscal measures overnight. And if you don't have that local knowledge, then you can go in with a presumption that the regulation is going to be in your favor if you make an investment, and that could completely change in one day. And so those shifts are just that they're very, very important to know if you're going to make not just any bet, but a calculated bet in investing in a certain market. So the more knowledgeable you can be in that is just a it'd be useful for anybody, even for someone like ourselves that have been in these markets for a long time.
And would you say that these regulatory shifts, even in Kenya or whatever, are those published online right after they're made? Are most of those regulatory shifts or regulatory policies published online and
They're
open
usually, yeah,
access?
yeah, they're usually announced. Yep,
So
yep.
why, like theoretically, why can't we just ask ChatGPT and say like the right questions, asking the right questions, and then getting the right answers, and using those answers to combine that into a report? Like, why doesn't that work?
It's a good question. I mean, I feel like that's like version one. You know, version one is the give me this information. I think version two is let's use a combination of this information I'm getting today with historical trends and how we've seen regulatory shifts in this particular market, and also transposing or superimposing our own investment thesis and how we've had to shift our own perspectives on how we invest based on either regulatory and macro shifts in the past in the typical markets of choice that we've invested in before. So it's taking it now to a layer of not just trying to make a decision on here's information that just emerged from multiple entities on the African continent on this particular topic. It's now saying here's how we've actually had to adapt in the past when we've seen market shifts in our own markets we're more familiar with. So in many ways, it's trying to make it much more attuned, I think, to the risk profile of the fund that is asking these questions and wants to use this information for something more powerful. It can't just be okay, this happened, but I cannot say with like clarity around how exactly that is going to affect, especially if I don't know much about the foundations from a macro level of this particular market. Like I've never invested in Nigeria, I've never looked at the macro trends, and suddenly some regulatory policy comes down the pipeline. It's almost like it's like I'm reading it is literally like reading a different language, because of the substrate of historic policy and regulatory frameworks in Nigeria are so different from somewhere like the US or the UK. I can't say with a lot of clarity around what the outcome is going to be with this policy without really knowing some more baseline info.
Yeah, and that's the difficult part, is that there's just so much unknown variables, even when you're asking the questions and also trying to access the information. So how, I guess like
Absolutely.
just like even you just trying to combat this a little bit, what specific AI tools are you using in your fund? Maybe like Zapier, or is there any that you created yourself?
Yeah, we're actually kind of on a bit of a journey with this. So right now, what we have is pretty baseline. We have Copilot that we have trained on our SharePoint. So all of our documentation we have in SharePoint. So when it comes to querying topics related to our portfolio, historic investments, deal flow, we can we can then draw that from Copilot. We have a couple of agents as well that we use related particularly to operating metrics. So we always like to see what the baselines are around certain key KPIs that at a board level we expect to see within a particular business model. So if it's verticalized SaaS, if it's insurance, if it's B2B marketplaces, and what we can do is we can query that agent to say, based on the latest data we got from one of our companies, this is what they're telling us these are. Can you share some of the latest trends on like what we think these benchmarks are based on recent searches? So that's kind of like where we're at right now. But right now, I think what we're also talking about is we have a couple of disparate sources of data. So SharePoint is one, but we also have our fund management tool, and we have our CRM, which just tracks all of our deal flow. Ultimately, we want to get to a point where we can query and run agents to use all three of those data points or data sets to create more comprehensive outcomes. So, I think we think about it from a let's build the foundational layer there. And then from there, what we want to start building is agents that can produce content for us, and some of those internal documentation, the things that can give us some more comprehensive benchmarks. So that's kind of, I think, where we see the world going. And what I would say is it's interesting. So I think there are some funds that clearly are further along in this journey than others, but I think there's a bit of a long tail that we're part of, where we're actually giving other funds advice on how we're starting this journey. It's like they're probably 6 months behind us. So it makes me feel a little bit better that we're not like completely like behind the eight ball. But I think there are other funds, and just ostensibly funds that have like bigger teams, developers that are like on staff that can enable them to do these sorts of things. But I think for most of us are kind of in this, 100 million to 500 million AUM. We're just like we're running much more lean, and so I think we're trying to have to figure out ways to put it all together. But I think that's where we're gonna go with it.
Yeah, and just quickly, could you like list the names of the AI agents? Because I kind of want to check them out.
Well, we don't. So the agents actually are just built on Copilot. So we've built them ourselves. But some of the tools we're looking at, like there's a lot of these. I like to call them sort of these like central hubs they essentially are like it's like a Chat GPT layer, but uh it ports in all of your own data. So there's ones like Glean, Core AI, Onyx. There's a few that I think we've heard some other organizations using. And then that kind of becomes the central hub by which they have like their data lake. They are able to port in their data via APIs and then query and build their agents on top of that. So, but we don't have any specific names for the agents. We just have more like jobs to be done. And then we'll probably use, I don't know what names we're going to use for them, but we'll figure that out as we go along.
Yeah, and that's the best part because you guys are actually really far along in this journey of operations as well, where Accion is a nonprofit. So the entire company is a nonprofit, but you guys are a branch, I would assume, that does VC. How does this kind of affect the way that things are run, since you guys are also focused on financial inclusion, and that's what other firms also ask you to give advice on?
Yeah, yeah, certainly. And absolutely, I think there's a handful of different impact focused investors that have a similar model to us. What we ended up doing a few years ago is we actually created a registered investment advisor. So basically a wholly owned subsidiary LLC under Accion International, which is the nonprofit. So Accion Ventures and the three funds that we have under the investment strategy we call Accion Ventures, which is the early stage investment strategy, and then also a couple of other funds are under what's called Accion Impact Management. So I think all in all, when we think about our long term plans as an investor under Accion Impact Management, it means that anytime that we at Accion want to probably build a new fund or a fund type or investment strategy, it all fall under that umbrella.
And would you say that, I guess, like, is focusing on financial inclusion part of the edge, or is it something that just must be done because you're kind of under this umbrella of Axion?
Well, I think we've demonstrated, I think across not just Accion Ventures, but I think across all the different investment approaches that Accion has taken is um, having a focus on advancing financial inclusion does not negate or mitigate potential economic returns. So I think right now the data is clear. There are 2 billion people around the world who are underbanked or poorly served by traditional financial institutions or entirely unbanked. Means that basic things like getting a credit card or even a debit card, opening a bank account, getting a business loan are simply not available to roughly a quarter of the population globally. The other metric I like to talk about is that there's roughly a $5 trillion credit gap between small businesses' demand for credit and the available supply. So you think about that, we have a $5 trillion market that can focus entirely on financial inclusion solutions. So it would make a lot of sense that building a business in this doesn't mean you're going to be constricted by how big the market is. So I think we have fully dispelled of any of the opinion of, well, you can't be an impact investor and actually compete on market rate returns. And we have the data to show that that is absolutely not true. So I think no matter what we choose to do, even as a, it's not as if we are hamstrung to have that investment approach. And if anything, we have just as many, I think, investments or deals we have declined to invest in because the investment thesis around financial inclusion or the customer they served didn't suit our needs there, as much as whether or not the actual business model was going to be effective or functional. So we put just as much energy into assessing the social impact component, both quantitatively and qualitatively, I will say, as we do on the economic returns and the financial outcome of an investment. I would say that I think, but also I think as an addendum there, our LPs, some of whom are development finance institutions, have very, very clear and comprehensive scorecards and metrics that they use for financial inclusion, particularly around gender disparity in financial access. So they've also helped us get really, really smart on these things and really, I think, up level our abilities to assess that effectively. So I think that for us is that we will always be, I think, focused in on that gap that will not be solved overnight, but we're hoping to make strides in.
Yeah, and personally, if I was in your role, I would be feeling extra good because of the millions and billions of people that would truly benefit from your portfolio companies. So for a VC, who's kind of looking at deals and helping with deals every day, what are the top three things that you look for in a startup when you're considering whether or not to invest?
I think first and foremost, it comes down to, do we believe there is a need for this product that is either not being met or is poorly being met by existing solutions or solutions that are on the market? So where it fits into if we have a TAM, that's great, but it's more of, do we see that this is a market that that clearly has that there is a necessity to disrupt? That's one. I think the second one we think about is, and again, I'm kind of talking from like the very like first principles, like when we're starting to look at an investment. I think the other thing we look at is, do we believe that this is a model that will serve, from first glance, will serve the types of customers that are in our consideration set? So does it help tackle those two big rocks that I mentioned before? And I think the third one is taking a first glance at the team. Do we feel like this is a team that has awareness and knowledge of this market? And that can vary, because I think sometimes there are certain markets and models that require much more bespoke knowledge. There are others that are more generalized. So I would say it's not necessarily, the team is not a disqualifier, but it is important for us to like have clarity on, do we feel like that they are the right team to build this? There's a fourth thing that goes along here as well. It's just the deal itself. Like, do we feel like the terms are right? Is this priced smartly? How much are they looking for? We like to have a certain, just given I mentioned the things that we do with our portfolio companies, we want to have a certain set of ownership on the cap table. Can we meet that based on what the deal terms are showing us and what our check size is going to be? So those are four things that if a deal comes across our way that I think we as a team like really look into. And I think if even if one of those four things is not totally clear to us, if we see promise in those other dimensions, then it doesn't mean that it could mean that we take it to diligence and start looking further into it, but recognize like this is still this is a potential red flag that we need to raise and address. And sometimes in diligence, those red flags are effectively resolved. Sometimes they remain, and in many of those latter cases, that's where we don't feel comfortable with what we learned during diligence to take a flyer on it. So yeah, it varies from deal to deal.
Based on those criterias and your past experience, maybe could you talk about one story of your most successful investment and how you met the founder and how do you know they were the one?
Good question. Yeah, we can talk a bit about, so this was an investment we made in India about a year and a half ago. It's a company they basically build financial infrastructure for non-banking financial institutions and microfinance institutions in India at the present. And what's interesting about them is, so first of all, they're doing extremely well. They just raised another round, and some pretty high profile investors came in and led that deal. But I think from first glance, what we saw with the founders is that they had been spending, I think they had all had spent at least 15 to 20 years basically doing this within larger financial institutions in India. Clearly understood the market. And so when they spoke around the problems that existed within that market, you could totally trust them on it. That was one. I think the other thing that was really that really gave us comfort was the solution that they had come up with was very easily explained. It was novel, but it made sense. Financial infrastructure is just, it can be incredibly complicated because there's so many different layers to it. There's multiple institutions, um, how you manage customer information, how you manage payment flows. It's just, it can be just a tangled web. And the fact that they could speak about with so much clarity, I think gave us confidence, number one, but also I think and this is the other dimension of it too, is they were getting pretty clear traction. They were they were selling a lot of times into smaller financial institutions, and we know just by experience that selling into any financial institution of any size can just take a lot of time. So the fact that they were closing deals so quickly with these prospective customers was a great signal to us. So I think those three things were like great anchor points. But I think the other aspect of this too was I noticed like the subtleties of what it is like to work with that founder. For me, I think it's really helpful in the diligence process to get a better sense of, hey, if I'm going to be talking with them about something difficult, like if we see a number that we think is a little bit troubling, we want to see improvement in the next quarter, or we need to talk through something operationally. Is this a founder that is going to hear me out, have a good conversation about it, learn from our experiences, share their own so we can learn from them, or are they just not even going to pick up the phone, you know? And we can have founders on all of that entire spectrum. I would say arguably that we try never to invest in the ones that fall into the category of just totally ghosting us. So I think the more we can learn from a founder by investing in them, the better it is for us. So I think all those things for these guys was it just hit on all cylinders, and I think we've been really pleased. I think with their progress up to this point. So that's the one that comes to mind right now.
Yeah, and it really comes down to team, just like you said. So I know that you've done like a bunch of roles around venturing startups. How did you like what are the key reasons you personally landed your role at Republic and then at Accion?
So Republic was just is as a venture partner, it was just something that I was in like a cohort with. It wasn't a full-time role, but I felt like I was one of those things where I wanted to continue to get exposure to deal flow, the overall like, investment process, and just understand what are the things that I can continue to do a better job as an investor. So that was a good experience for me as well. Like just being in cohort with other investors who had been around around the space for much longer than me. So that was really helpful just to meet like on a I think it was roughly on a monthly or quarterly basis with with other venture partners in that cohort. But I think just for me it was I think I joined right around the time that I also joined Accion, and so I think coming in as an operator was also like a helpful addition to that cohort. With Accion, I think is really interesting because I think about what it is I brought to the table, but also the things that I needed to learn. So what I really, what I appreciate about my work now is I feel like it's a culmination of all the things I wanted to do when I went to grad school. So, I got my MBA, I got a Master of Public Policy, and I even had shared that, my interest is in how business and society can coexist to solve the world's most pressing problems. That was why I went to grad school. And I feel like I got a lot of the business side of things, but not as much on the society side and also like the pressing problems. So yes, I could, GitHub and Salesforce solve problems, but I wasn't necessarily the one seeing what those problems were that were being solved. So I think I was always looking for what that next journey was going to be. So I think when I started talking with Accion, I was pretty honest around saying, look, I have deep operating experience working with early stage startups. Now, I don't have experience in fintech. I've had fintech clients at GitHub and Salesforce. And I also have not done a ton of work specifically in emerging markets. So I clearly have things I want to learn here. But I think coming to the table saying, I think that my foundations can translate well over here, especially by saying, I think there are things that Silicon Valley startups know that every startup should know with some caveats. So I think coming in with that baseline, I think was more valuable than I think knowing about fintech and emerging markets. And in many ways, it I think offered a different lens into how our company should operate. So I think that's I really led I think my conversations with the team around that topic, and just I think in many ways just said, but the things that I don't know, this is the team that has the expertise to help me get better at that stuff. And I think that's really translate over. Like certainly there's on a daily basis, there's more and more I need to learn about these markets. But I think I also joined a team that really believes, I think, in sharing their knowledge. In many cases, if you look, the Ami and Rahil, the managing partners, have basically spent like most, if not their entire careers, investing in these markets. So, what better foundation to learn from than them on those topics, and they learning from me around what it's like to be an operator.
Yeah, that's the most important part is that what you brought was that startup experience from Silicon Valley startups. And these experiences are really, really valuable because it's what founders feel on their side versus for the perspective of the VC team. They're really solid. Like they've got that fintech. They understand the market. They have the foundations, just like you said. They are the most knowledgeable. But what you have is also the mindset to be really curious and continuously learn. Because if you don't do that, you're just honestly not going to be a good VC because you're not going to know everything. And in fact, like in every single deal, you're probably learning like so much. Whereas, if someone who just doesn't want to learn about new stuff constantly and
Mm.
consistently and exponentially, then yeah, they're definitely not suited for it.
Yeah, there's a constant need, I think, to like check your priors, and sometimes you have to do it on like a weekly basis because something you thought you knew about a model then changes because you see a different approach to it. Yes, there it can be a very humbling experience because you realize that you may know a lot of things, but there are so many things that other people know more about than you do. It is not for the faint of heart. It's not for someone who believes they need to be the smartest at everything because you're going to get humbled. I get humbled very, very often in this job.
Yeah, I know you talked a little bit about how to break into VC. For our viewers who needs an actionable plan to implement right away, what would be your theoretically recommended 6-month plan to fully break into VC as maybe a aerospace engineer?
I mean, the first thing is just going back to my one of my initial comments is make sure you really understand like is this the job you want to undertake. So I think taking time to connect with folks in the industry. I think a lot of investors are willing to take a coffee or just like a 15-minute chat or at least like answer the questions that you might have. I think just continue to absorb, like figure out what kind of knowledge base you need to have to understand what the role entails, why it is you want to do it, how you would tolerate the things that you're not excited about with the job to make sure that it is like right for you. And that's one. I think the second one is, and this is unfortunate, but I think it's just the way, given that the industry is small and is for a variety of reasons, a lot of people want to get into it. I think like warm intros and conversations are still in many ways the way it goes, right? You're not going to find, except in very rare cases, I think you're not going to find someone who gets into a fund simply through an application. Now, I will be contrarian in this. And I would say the last three people I've hired on my team did not come through a referral. They were cold. They applied for a role, and I am a person that actually looks at every application that comes in. So I'm sort of defying that. I would say like a lot, but most funds, I think referrals are oftentimes the case. Now the other aspect of this too is I think for someone who's looking 6 months out, really understanding who to target. So many funds that are at the end of their deployment period are not probably hiring. A fund that just raised that just got new management fees under their belts, likely hiring. If a fund is yeah, like that there's all these like different, so I think also beginning to build out the knowledge base of okay, what funds am I really excited about based on thesis, region, team, whatever, like think whatever your variables are that are of most importance to you. Now it's thinking of, okay, where are they in their fund cycle? Because if you want to try to get a job 6 months from now, a fund that closed their last, that might be like that had their last fund announcement 5 years ago may not have the management fees to hire a new person. So they're like little things you can start to point out. So I think like triangulating that around which funds you think are there, getting that knowledge base from folks, and then seeing if you start making intros via your networks into those. I think especially for like at a younger age too, the more you can demonstrate their capabilities and knowledge to folks in VC, whether it is at a fund you're interested in or one that like has connections to other funds, I think is also very useful. Within all that though, I think it's the balance of being persistent but not a pest. I actually used this term myself when I was applying for business schools because I wanted to get good inside knowledge that could be helpful in like putting a good word in at like the investment or the admissions committees, but not being so annoying that I like it's a turn off. And I think that nuance there of really what it is that you can help like every type of interaction you have with someone at a venture fund, like what's something new that you could learn. So it could be something like, hey, I was doing research on this like latest topic in like the Central Bank of Nigeria. I wrote something up really quick about it. Like just showing, I think like the aspects of these are things that I think would be helpful. And also I think especially at the more junior level, these sorts of research elements and like your appetite for learning more and sharing that knowledge across your team is like a really, really crucial part of the job. So I think the way you can share that with your contacts within venture, I think is also a helpful thing to do. So I think whether or not that's going to happen in 6 months or a year, you can never promise, but I feel like there's a good, like, again, base layer you can build out of knowledge, connections, research, and awareness that I think can set you up for future success. And just cross your fingers that the timing lands as well.
And when you do this exact plan, it's going to get exponential. At the first, it might start to feel like, nothing's happening. But then by like the 3 month mark, it goes exponential in fourth and fifth and sixth. And it's insane how connections can be formed and
Hmm. Yeah,
foundations can be built. So,
I agree. Yeah, I
yeah,
agree.
uh, let's go for a few rapid fire questions to wrap up.
Sure.
A
Yeah.
few words or one sentence. Ready?
Yes.
If you could invest in any startup from the past, which one would it be?
God, I have to think about that. Pass. No, no, I know. What was I gonna say? I really like Samsara. It's one of my favorites.
Favorite place to travel to, but haven't yet?
Japan.
Oh my gosh. What is one fun fact about you most people don't know?
Don't know me. I'm an ultra runner.
I know that, dude. You literally put it on your LinkedIn profile.
Okay, I know, I know. Let's say I haven't looked at my LinkedIn, then that's what I would tell them.
No, no, but most people who, I guess, like kind of knows you, maybe acquaintances or whatever.
Okay. Fine. I grew up in South Dakota.
Okay, okay. Is there any quick thoughts you want to finish or we didn't get covered on this spot that you would like to talk about?
Go Blue. Michigan is the
Awesome.
best school in the world.
That was amazing, Matt. For anyone listening who wants to learn more about you or your fund, what is the best place to reach you? LinkedIn, email?
LinkedIn, and our website is at accion.org/ventures. So you can look more at what we've invested in and our latest thinking.
Awesome. And I'll put the contact details in the description below. Out of everyone you know, who are two amazing VCs that you would recommend as future guests to our podcast?
Oh goodness. You should talk to Tyra Dosani from Resilience VC. You already talked to Ethan Austin, but Kalsum Lakhani also is great from I2I Ventures. I think those are two really great folks in the industry that if you have a chance to chat with them, they're both awesome.
Thank you again, and thanks to everyone who's listening. Comment a question you want to hear from our next guest or Matt. If you enjoyed this episode, make sure to press the subscribe button, like, and share with someone who's interested in getting the venture. We'll see you next time on Break into VC.